Recent reforms to foreign exchange market operations by the Central Bank of Nigeria is still a hot topic in financial circles within the country and is said to have generated renewed interest among foreign investors eyeing Nigeria's highly attractive equity valuations. Following announcement of the reforms, shares of listed banks and other value counters on Nigeria's stock market rose significantly, leading to a 3.13% rise in market capitalization at the close of trading that day. In this episode, we continue with our expert analysis of impacts of the changes in forex market operations, interest rates, and inflation, how to achieve balance for economic stability and growth. That's in a moment. Stay with us. Thanks for staying tuned. In a press release on Wednesday, June the 14th, the Central Bank of Nigeria announced changes in forex market operations. The Apex Bank eliminated segmentation and collapsed all segments into the investors and exporters I&E window. Other changes include reintroduction of the willing buyer, willing seller model at the I&E window and use of the weighted average rate of the preceding day's transaction as the operational rate for all government-related transactions. The CBN also ended its RT200 rebate scheme and the naira for dollar remittance scheme with effect from today, June the 30th. The impact of the FX reforms is noticeable across different sectors of the economy. And for insights, we spoke earlier with an economist and the chairman, Chartered Institute of Bankers of Nigeria, CIBN Abuja branch, Professor Uche Uwaleke. Professor Uche Uwaleke, many thanks for joining us on the program this afternoon.
Thank you so much. My pleasure.
Now, the Nigerian stock market reacted positively to the exchange rate unification move by the Central Bank of Nigeria. A local newspaper, specifically Business Day, reported that investors gained 992 billion naira following the official float of the naira. Now, I want you to explain to us the relationship between the two, the stock market and forex market regime.
Yeah, thank you so much. The stock market is a market where you have not only domestic investors, that's talking about institutional investors, whether they are pension funds, whether they are mutual funds, or insurance companies, or even retail investors, individuals. It's also a market where you have foreign investors. So both foreign investors and domestic investors play in the stock market. So, and as you know, foreign investors are interested in, if you like, a high return. Every investor is interested in return. And on the part of foreign investors, that return will be higher if the naira is, if you like, devalued. So a devaluation of the naira or a depreciation of the naira is in favor of foreign investors because that will have a way of increasing the return that the foreign investor will get. So devaluation has a way of, if you like, pulling in, crowding in foreign investment. And another thing you also need to know is that a foreign investor is also interested in how, quickly he or she can also repatriate his return. And that speaks to the transparency of the Forex market. If the Forex market is transparent, the foreign investor knows that he can come in at this rate and go out at a particular rate. Of course, that encourages the investor to come to Nigeria to invest. So when the CBN announced the unification of exchange rates, in fact, starting from the signals from the president, and then the CBN eventually collapsed the multiple exchange rates to one single forex window. Let me see. Recall that before now we had up to 4 multiple exchange rates. So as I said, that unification, because the unification has led to a higher exchange rate, a devaluation of the naira, it has excited investors, foreign investors, and of course you have followed the reports. Both the World Bank, IMF, investment banks have commended Nigeria, for doing such, and that is because it will encourage transparency in the forex market. What used to be the round tripping of funds, will be reduced, because right now you just have one single window. We don't have multiple again, and again, it has also now closed the gap between the official rate and the parallel market rate.
But I want us to quickly look at the flip side. Nigeria is still predominantly a raw material exporting country. So how has the changes, the reforms in the forex market, how are they impacted on the commodities market? Has there been any impact at all?
Of course, there has been. You see, I just told you that the unification of exchange rates is one measure, in my view, whose time has come. But that is not to say that the multiple exchange rates we had in the past didn't, achieve anything. There was a reason for introducing them in 2016, and that was primarily because the crude oil price fell, reserves were, being depleted, and then the central bank saw the need to also have those multiple windows. Eventually, in 2017 April, central bank also had to introduce the I&E window. So at the time it was introduced, there was need for the introduction of multiple exchange rates. But of course, as I said, it has played this part. It is not something that is meant to last for forever, which is why it is welcome. But what I have my concern about the way it's been implemented, it is the drastic approach that that is being taken. If you look at literature on how countries move from a fixed exchange rate system to a flexible exchange rate system, it's usually a transition. Okay, it's a process. It's not a one-step process. But in our own case, we've made it a one-step process. We've gone about it drastically, and of course, the impact is now, being felt, especially against the backdrop of the again, sudden removal of fuel subsidy. So the is expected. Commodity prices are already rising. Transport costs, transport fares are rising. Of course, that one is majorly because of fuel subsidy removal. But we should also expect that in the short term, because exchange rates have been unified, and today the naira is exchanging for as high as 750 naira to the dollar. Even though some say that was also the rate, the parallel market rate, and most pricing mechanisms have already factored that in. But it is also a fact that the unification is impacting, because of the drastic nature, it's also impacting negatively on commodity prices. So inflation rates in May, as you know, came in at 22.41. That of June is going to be a lot higher, and that's primarily because of not only fuel subsidy removal, but also the way we have gone about collapsing the exchange rates. In my view, I would have advised a slightly gradual process of ensuring that the multiple rates eventually converge, rather than the way we have gone about it. And that's because of the fact that for you to sustain the exchange rate in terms of stability, okay, you need sufficient reserves. You also need a diversified export base. Because we don't have a diversified export base,
you seem to be reading my script, Prof, because those are areas we'll also delve into. I just want us to take it one step at a time. Now, the new foreign exchange regime is set to favor banks with positive net forex exposure as they gain more with the naira depreciation. But with risk-weighted assets increasing significantly, putting pressure on capital adequacy ratio, do you see some Nigerian banks needing to raise new equity capital to shore up their capital base anytime soon?
Yes, of course. There's no doubt that the deep depreciation of the naira has altered valuations in the banking industry. And except our banks are well capitalized, again in dollar terms, they won't be able to compete, globally. So what this has done is that it has now created a need for a number of banks, especially those of them that are playing in the international scene, to also look for more capital to recapitalize. But I'm not going to advise that this recapitalization should be regulatory induced. It shouldn't be forced on banks like the type we had in 2005. In 2005, it was mandatory for all banks to recapitalize from 2 billion to 25 billion naira. But that is not what I'm recommending now. In 2005, it was done because a number of banks were weak. We had 89 banks at the time, and a stress test carried out by the central bank at the time indicated that only a few of them were sound. But that is not the case today. Today, the few banks that we have, 21, 22 banks that we have, according to the Central Bank of Nigeria, figures, the financial soundness indicators for these banks are strong. Whether in terms of non-performing loans of the banking industry today is below the 5% threshold. The central bank says it's 4.4. Liquidity ratio of banks today is above 40%. The capital adequacy ratio is also within threshold, between 10% to 15%. So I am saying that the financial soundness indicators for banks, show that our banking sector is still strong. So there may not be need for a forced recapitalization. Okay, but as I said, of course, we have a tiered structure in the banks. We have the tier 1, we have the tier 2, and tier 3. So those of them in tier 1 who, of course, have links abroad, who are also playing in other countries, should now be thinking of recapitalizing, with a view to becoming more competitive. So that should come as a business need, okay, not from a regulatory point of view. Capital inflows into this country come through banks, and the bigger the bank, of course, the chances that the bank will be in a stronger position to attract, capital inflows.
All right. Moving on away from banks now. Financial Times, in an article titled "Foreign Investors in Nigeria Look Forward to Return to Orthodoxy," stated that foreign investors were keen to hear about the new administration, how the new administration intends to breathe life into Nigeria's economy. Now, with the recent reforms to Forex market operations, would you say that the investment environment has improved as investment conditions improve in Nigeria, or are more reforms still required in other areas?
Of course, the right steps are being taken. As I mentioned earlier, what has happened so far, has excited investors, foreign investors, especially the pace of the reforms. So I think the reforms are bound to attract capital to Nigeria, but the type of capital that is coming now is foreign portfolio investment. Foreign portfolio investments is investment in the stock market, for example. Investors coming to take positions in our treasury bills Those ones are foreign portfolio investment, but those ones are not sustainable investments. Sustainable investments come by way of foreign direct investments. And foreign direct investments are, represent what we call patient capital. They, stay for longer periods. It's a situation in which you have a foreign investor coming here to establish business, establish a plant, possibly manufacturing or rendering service. That is foreign direct investment, and that is the one that the economy requires, as opposed to an investor just coming, buying stocks, and then whenever there is a problem, he will suddenly sell and go. Those ones destabilize the economy. So the country needs foreign direct investments. But for foreign direct investments to come, it's not just about unifying exchange rates. It goes beyond unifying exchange rate. We also need to put our business environments in order. We need to fix insecurity. Okay. We also need to do a lot about the ease of doing business. So foreign investors take into consideration a number of factors beyond just the fact that your exchange rate is now market determined. And foreign direct investments cannot come except we put our house in order. Insecurity, infrastructure, access to credit. Look at electricity. For example, that is key. A foreign investor coming in here will be looking at the power situation. There is also the tax consideration. Our tax regime is high. Okay. Any foreign investor considering Nigeria and Ghana, for example, for investment, may want to go to Ghana because the tax rates in Ghana and or the tax system in Ghana is less complicated than we have in Nigeria. So, and that also speaks to, as I said, the ease of doing business. So we should move beyond just these reforms, to have a holistic view of the other sectors that border on ease of doing business.
Okay. Now, the European Central Bank held the 2023 ECB Forum on Central Banking earlier this week, where they discussed macroeconomic stabilization in a volatile inflation environment. And that theme speaks to Nigeria's present situation, where we have high interest rates, high inflation rate, and all. So how can balance be achieved to ensure economic stability in Nigeria's case?
You see, the challenge that central banks have, especially that of Nigeria or developing economies, is how to go about having low interest rates, low inflation, low exchange rates, strong reserves. That is usually a very difficult task. And that is why you find that even in literature, that is called central banks policy trilemma. Central banks usually have that problem. And in developing economies such as Nigeria, it's made more difficult because the drivers of inflation are not predominantly monetary factors. Okay, look at the case of Nigeria, for example. Ordinarily, raising the monetary policy rate, which is a major traditional tool, instrument to fight inflation, raising it should go a long way to bring down inflation. But in our own case, it has not happened. Since May last year, when the central bank started raising the monetary policy rate, today it's 16.5%. It has not done much in terms of reducing inflation. Rather, inflation has kept going up. So that tells you that there are other factors, driving inflation. It's not just about increasing money supply. Okay, and that is why to tackle inflation in Nigeria, both the fiscal and monetary authorities must, have an understanding. There must be a handshake, which is why I support the idea, and I want to urge the new administration to quickly put in place the Fiscal and Monetary Policy Coordinating Committee. There is need to synchronize fiscal and monetary policy such that the issue of inflation, can be approached holistically. There is the issue of insecurity, which is, of course, preventing farmers from going to farms. Okay, kidnapping, farmers' headers clashes. These things are still going on, and that is why you have this food challenge. Inflation rate today in Nigeria is more on the food. The pressure is more on the food. That's why food inflation is higher than the average inflation rate of 22.41. Food inflation is as high as 24.9%. So if we can tackle insecurity, okay, tackle food output, invest in agriculture, and that is the role of the government to tackle. It's not the central bank, okay. Again, look at the issue of infrastructure, transport. If we address these issues, cost of transport, cost of electricity challenge in this country again is not part of the. It's not the central bank. It's not within the central bank purview. It is that of the government, the fiscal authority. So if the fiscal authority is able to tackle electricity, is able to tackle insecurity, is able to tackle climate change issues, flooding and so on, you will now realize that output will increase. And if you have increased output, inflation rate will come down. So whatever the central bank is now doing will be now receive, will now be complemented. But the way it is like clapping with one hand. The central bank is on its own trying to do much to reduce inflation. But on the other side, the fiscal authority, the government is not helping matters. Okay. When you spend money more on recurrent expenditure, it also tends to breed inflation. So the way forward, as I said, is for this synchronization to happen, for the fiscal authority to recognize that fighting inflation is also its responsibility. It's not just that of the central bank because of the factors that drive inflation in Nigeria. On the issue of interest rates, okay, the president during the inaugural speech during inauguration, okay, said he would like to have a low interest rate environment. Okay, well, of course, it's desirable. It's desirable, and you need a low interest rate environment to even drive growth. Okay, because if interest rates are high in the economy, access to credits will be reduced. So small and medium enterprises will have a serious challenge, which is why I'm happy, which is why I'm commending the government for saying that they have plans to now come up with low single-digit interest rates for small and medium enterprises, SMEs. Even though we have also had the central bank before now, have also tried to intervene using single-digit for SMEs, but maybe this time around they may want to scale it up to ensure that a lot more SMEs get these single-digit loans. So we need to actually reduce rates in the economy. And my advice to the central bank is that it is time that they change stance, monetary policy stance, rather than further tightening monetary policy. The central bank should consider, reducing the MPR and working towards having a low interest rate environment. But the major challenge now we have, why the central bank may still be forced to increase rates, will now have to do with this unification of exchange rate, devaluation of the naira. Because if you devalue the naira and you expect foreign investors to come, foreign investors will come only if they see interest rates rising. If interest rates are low, their returns are low, they won't come. So in order to support them to come, you need to raise your rates. Because the more you reduce your rates, the more the investors who are here will even live with their investment. So that's the dilemma.
We'll leave it there for now. Professor Uche Uwaleke, it's always a delight speaking with you. Many thanks for your time, sir.
Thank you, Yemisi.
That's all from the CBN this week. Be careful not to fall for any fraudulent recruitment portal or loan scheme advertisements purportedly from the Central Bank of Nigeria. Get your information from trusted sources always. Report unresolved banking issues to the CBN Consumer Protection Department using the email cpd@cbn.gov.ng. Attach relevant documents. Call the CBN Contact Center on the phone line +234 700 2255 226. Local call rates may apply. Write to us through the email address from the cbn@gmail.com. Follow us on Facebook, YouTube, Instagram, and Twitter for updates and to watch uploaded episodes of the program. We invite you to join us again next time. I'm Yemisi Dada. Stay safe and bye for now.